Stocks have always been one of the benchmarks for growth investments. But have you ever wondered how they perform compared to a safe, high-yield investment like MP2? I'm James. In this video, we'll compare both. Based on actual historical data, we'll look at how each investment performs with a lump sum and monthly investment. To make things more interesting, we'll see which one reaches 1 million first. In this portfolio showdown, we'll pit the PSEi against MP2, plus a portfolio with a 50-50 mix of both. Before diving into comparisons, let's first examine the key differences between MP2 and the PSEi. With MP2, your capital is secured. This means that even if MP2 underperforms, your principal will retain its value throughout the lock-in period. On the other hand, PSEi investments depend entirely on the state of the economy. You could earn higher returns when the economy is strong, but you could also lose your capital if the market crashes. You might be wondering, why invest in something that could lose your capital? To answer that, we need to look at the historical returns of both investments. Since MP2 was launched in 2010, we'll compare it against PSEi data from 2010 to 2024.
Looking at annual return data, you'll notice a vast difference in their performance. Let's start with MP2. Its lowest historical dividend return was 4.48% in 2013, while its highest was 8.11% in 2017. Since capital is protected in MP2, even if Pag-IBIG's earnings drop, MP2 returns never go negative. This stability attracts many conservative investors. The downside, however, is that its highest return to date was only 8.11%, and that was back in 2017. Now compare that with the PSEi. Its highest return during the same period was 44.51% in October 2010. If you had invested in January 2010, your return would have hit 44% in less than a year, over 5 times MP2's peak. But the downside is steep. The PSEi's lowest return was minus 32.82% in March 2020, at the start of the pandemic. If you had invested in March 2019, your money would have lost nearly a third of its value within a year. From 2010 to 2024, the PSEi posted negative year-on-year returns for about one-third of the time. These highs and lows highlight the sharp contrast between the two investments. To better understand how these numbers affect your money, let's examine different scenarios to see which investment reaches the 1 million milestone first.
For our first test, let's start with the 400,000 peso lump sum. If you invested 400,000 pesos in the PSEi in January 2010, your portfolio would have reached 1 million by the end of 2014. It would then dip in 2015 and 2016, bounce back, and peak in 2017. But if you held on until 2024, your fund would drop to 794,000 pesos, losing almost 400,000 pesos from its peak. MP2, meanwhile, climbed steadily from 2010 to 2024, but never quite hit a million. By the end of 2024, it reached 980,000 pesos, just 20,000 pesos short of the milestone, but still higher than the PSEi fund. The 50-50 balanced portfolio also failed to hit 1 million with a 400,000 lump sum. However, it outperformed MP2 from 2010 to 2022 and outperformed the PSEi from 2023 to 2024. Now let's see what happens with the 500,000 lump sum. If you invested 500,000 pesos in the PSEi in 2010, your portfolio would reach 1 million by the end of 2012. MP2, by contrast, would only cross 1 million a decade later in 2022. The balanced portfolio reached 1 million at the end of 2017, 5 years later than the PSEi, but 5 years earlier than MP2. By 2024, the PSEi slipped back below 1 million at 992,000 pesos, while MP2 and the balanced portfolio both stayed above 1 million.
But what if you started in 2014 instead of 2010? With a 500,000 peso lump sum in 2014, the PSEi outperformed MP2 in the first year. By 2015, MP2 slightly pulled ahead. In 2016 and 2017, the PSEi surged again, peaking at the end of 2017, but then trended downward through 2024, finishing with a 3% loss. MP2, on the other hand, kept climbing steadily and reached 1 million by 2024, more than doubling the investment and outperforming the PSEi. The balanced portfolio ended 2024 ahead of the PSEi with a 51% return. Now let's examine monthly investments. If you invested 5,000 pesos a month,
MP2 would reach 1 million first. It took over a decade, finally reaching 1 million in December 2021. The PSEi barely touched 1 million in October and November of 2024, only to fall back below that mark by December 2024. The balanced portfolio performed even better, reaching 1 million in April 2023. If you double your contribution to 10,000 pesos a month, the results flipped. The PSEi reached 1 million in March 2016, while MP2 followed in December 2016. However, by the end of 2019, MP2 overtook the PSEi and stayed ahead as the stock market trended downward from 2020 to 2024. The balanced portfolio remained in between, performing more steadily than the PSEi, but not surpassing MP2's long-term climb.
So, what do these results mean for you as an investor? This study highlights the strengths and weaknesses of each portfolio. Stocks offer huge returns if you invest during market downturns, while MP2 provides steady, stable growth. The right choice depends on your stage in life. If you're young, a volatile but high-yield investment could benefit you in the long run. But if you're nearing retirement, stability becomes more important. You wouldn't want your portfolio to crash 20-30% right before you retire. And yes, stocks can absolutely fall that much in a single year. If most of your retirement fund is in stocks, you could be in serious trouble if the market tanks. So, what's a good strategy? This study shows you which investment fits your risk appetite. If you can't stomach a 20-30% loss, MP2 is your safer choice. If you're comfortable with short-term losses for the chance of 50-100% gains, then stocks may suit you better. Personally, I believe in diversification. Of the three options, my portfolio is closest to the balanced one, with a twist. I use a formula that adjusts my stock to safe investment ratio based on my age. 100 minus your age equals the percentage you invest in stocks. The remainder goes into stable options like bonds, high-yield savings, or MP2. So if you're 30, your portfolio would be 70% growth investments and 30% stable options. No matter which path you choose, one truth remains. Success comes from consistency and patience. Whether you ride the highs of a stock market bull run or steadily grow your savings through MP2, the key is to stay committed to your plan and give time the chance to work its magic. If you enjoyed this video, don't forget to like, share, and subscribe to my channel for more content like this.